What's going on, guys? Welcome back to another video. I'm your host, Cobra Trading. If this is your first time here, thanks for joining us. Make sure that you smash that like and subscribe button so that you don't miss out on any tutorials or analysis that I do here on the channel. So I've been getting a lot of questions recently about ranges and when the price is going flat. This is also known as a reaccumulation phase or a redistribution phase, depending on if it's after a bear trend or a bull trend. So today we're going to go over identifying these ranges, how to trade these ranges, and this works across all markets. So it doesn't matter if this is legacy markets, like stocks and futures, Forex markets, as well as obviously digital asset markets. I'm going to be using Bitcoin as a good example because right now it is currently ranging on the lower time frame. So we're going to go ahead and get into that. Let's go ahead and take a look at the charts. So here we are on our 15-minute chart, and you can see here that the price action for the most part is pretty flat. We're basically ranging here from 56,400 down to about 54,550. Okay, so you can see the price is just kind of ebbing and swaying here. There isn't really too much going on. It's mostly just chop right now on this lower time frame. You can notice we've got a bearish MACD, but it's in bullish territory, and our RSI is sitting above the 56 mark. So that is a little more bullish than anything else. So the way that you can identify the ranges is what I like to do is I just take my fib retracement tool and I measure from a low to a high. And basically what I end up doing is I get rid of all of the other levels except for the 0, the 0.5 and the 1. So this kind of gets more into mean reversion and stuff like that. I didn't want to really name the tutorial that because that's not exactly what this is about, but this does absolutely have a lot to do with mean reversion and things like that. Why did I pick this candle instead of here? Well, the reason why, you could actually use this one too, is because this is a liquidation candle, okay? Whenever you see a really, really, really long wick to the downside like this, this means that, this candle here, this ended up triggering a small long squeeze, okay? So this isn't organic price action. So what I like to do is use the very next wick to the downside because normally that's going to end up defining the range. And as you can see here, we tapped it 2 candles later. We tapped it on our next down move. We rejected off of our median line. We tested it again as support, and then we were trying to climb up higher. Okay, so that's kind of how I like to define ranges whenever you see something like this. So right now, this is a period of consolidation. So the way that you can tell if a period of consolidation is reaccumulation or distribution is the trend that like the move that happened before you ended up entering into a range. So in this case, obviously the price was moving downwards. So this would be a consolidation. Okay. And obviously, since it's moving from the downside, this would be a period of reaccumulation. Okay. So if this chart was flipped upside down here and we just invert the scale and it looks something like this, if this was a bullish trend and obviously the red candles would be green, the green candles would be red. This would basically signify that this is an area of distribution. So if we flip the scale back to normal here and we bring the chart back to the way it's supposed to be, this is our very well-defined range here. Now, obviously, this isn't going to be a super long video. This is pretty much everything that you're looking for. I really enjoy trading ranging markets because once you get a very well-defined range, it's very easy to play these. So we defined a top range here. This was our micro local top. Okay, so on this candle, you could have shorted here, wrote it down to the bottom, taken profits, wrote it up to the top. It looked like it rejected here. You could have shorted this candle, wrote it back down, longed again on probably this candle and wrote it back up. Another thing that you can do is you can put on other wicks when you're looking for support and resistance. And again, I do have another video of this. I'll link this up in the top for you, how to draw trend lines and things like that. You can use some of these other wicks and just draw kind of like an intermediate range here, right? And just kind of use those as other support and resistance levels. So you can see how when you do that, the range is a little bit better defined. So you could have came down here and seen this wick, okay? And this could have been a really nice long. So the way that we play these when we're in the range is we play basically from highs to lows and lows to highs within the range here. Whenever you're doing this, this is kind of a more advanced trading technique, okay? What I mean by a more advanced trading technique is you have to have very, very solid risk management skills in order to be doing something like this. This is a little more advanced. Most people end up really getting chopped up in things like this. So it's not normally recommended for beginners or traders that have less than a year or two trading experience to kind of be diving into this. However, if you want to, I suggest first maybe using whatever strategy you have and paper trading it just to kind of get a better feel for how the price action reacts in these different ranges, and kind of go from there as you're building your strategies. You definitely have to have a really solid risk management plan for doing this, okay? And I'll go over that in just a minute. Let's go back to the charts. So what I mean by a risk management plan for this is if we're assuming that we're going to be staying in this range for a while, which honestly, that's kind of what it looks like. We've been here I guess since the 10th. So for a day, we've been ranging. What we want to be doing is obviously we reached the top of our range, okay? And we're up here in the top of our range. So what would we want to be doing if we were deciding to be going short here? So what you would want to do is you would probably be shorting one of these three candles, preferably the green one. Normally you want to short the rips and buy the dips, right? So if you were shorting up here, and, let's say, obviously, no one's ever going to get a perfect entry. Let's say this was your entry, right? At the close of this candle, it looks bearish, okay? Not very much price action. There's a lot more bearish movement since the wick to the downside is a lot longer. And you can assume that the price would probably be moving lower. So what you would want to do in this scenario is something like this. Okay, so something like this would probably end up being your trade setup. Now, why did I put my stop loss here? Well, I didn't use my traditional ATR calculation, which normally I do like 3 or 3.5 times the ATR. That's normally recommended for swing trading. And obviously this being on such a low time frame, you're trying to make this either an intraday trade or probably something that's not going to be open for longer than about 8 hours. So what I like to do is put my stop loss just above, the previous high. Okay, so we've got a candle up here with a wick, and I would probably put my stop loss just above that high. Okay, so you can see here that what ends up happening is if you're targeting the lower limit of this, you've got a pretty high risk to reward ratio with a very tight stop. Okay, you're talking about losing less than 1% here. On lower timeframes, you would probably be utilizing some kind of small leverage, maybe 2x or 5x or something like that. So even if this was like 5 times, you're really only talking about like 2% of a loss. Which is basically what you're going to be aiming for with riskier trades like this, especially when approaching the top end of this. So this is one way to trade this if you wanted to trade, against the overall trend, which obviously we know we're in a major bull market. Trading against the trend is normally not recommended. However, on these small time frames, you're looking for as many opportunities as you can. And obviously there will be more on smaller time frames because you have more candles and more information. If you were attempting to long from here, then what would you be doing? Now, what I would personally do is something like this, where we take our long position, and I would probably want to be entering somewhere around here. Okay, so this other little line of support that we have, right? So we just broke above that with this nice solid green candle, and it looks like the price action is trying to come down here and basically test, this level again. What I would do in this situation is, because I don't know if there's going to be further downside, again, you want to keep those stop losses really tight. So what I like to do is, place my stop loss below, the last couple wicks here. If you wanted to go really loose, for a scalp, considering you're probably using leverage on this, you could come down here. But just keep in mind that when you do that, your risk to reward decreases a lot. So if you're looking, for a take profit level, say up here where these candles are, okay, and if you were to measure that, you're really only like a 1.5, to 1 risk to reward ratio, which isn't very good considering that your stop loss now is almost 1%. So with leverage, that would be like a 5% loss compared to the short opportunity, which would be like a 1 or a 2% loss. So that would require you to potentially maybe turn this into a better swing position where you would have targets up here, retapping our local top, which would turn it into a 4-to-1 trade, which is really good. So I do have other videos on how I like to enter trades using a laddering technique and stuff like that. Again, I'll link the video up in the top right-hand corner for you, okay? So that's kind of the way that I like to be looking for entries on these lower timeframes, especially when things are ranging like this. For me personally, I would probably be looking for the short opportunity here. And again, you have to use other indicators and the other parts of your trading strategy to be looking for confluence with this, right? Like you don't just want to be hopping in, to a short position without taking a look at what your volume is doing, taking a look at what your other indicators are doing, potentially taking your drawings off the screen and taking a look at what Ichimoku Cloud is doing. So for me, these would be all of my reasonings for potentially going short on this. So, my stop loss, again, using Ichimoku Cloud here to be looking for confluence. If I was going for a short position and this top of the cloud was my entry, then my stop loss would be just above this 200 EMA, which is above this last wick, like I mentioned before. And I would be targeting at least the Kijinsen line down here. And that's, again, about a 4-to-1 trade. If you end up hitting the bottom or the very lower limit of this, you're talking about a 7-to-1 trade. At the end of the day, don't be afraid to get your chart messy. You understand your trading strategy better than anyone else's. Those that have been on my channel for a while, they know that this is the way that I trade. These are the kinds of ways that I look for entries. This is how I'm looking for confluence. So this is my own style. You guys can use this. You guys can obviously learn from me and try this stuff out yourself. But you want to be doing, like looking for confluence, obviously, with your own indicators, as well as, paper trading any new strategies that you're implementing. So if you decide to try and go off of mine, for ideas and stuff like that, that's fine. I encourage that, but make sure that you're not doing it with a live account first. Okay. You never want to jump into a new strategy with indicators that you may or may not have used before. And, you have a way higher risk of potentially, liquidating your account because you weren't used to trading this way. You didn't study the indicators. You didn't really learn how to fully use them. And you just kind of jumped in with a live account, and you could really end up screwing yourself that way. That's it for today, guys. I really hope that this video helps you able to better identify when the price is ranging, especially on lower time frames, as well as how to use your other indicators and the rest of the stuff that's in your own strategy to kind of get a better idea for where the price action may go, and in terms of risk management, how to protect yourself in case the price does end up moving against you, so that you're not in some serious losses or anything like that. There's a million different strategies out there. There's no one size fits all strategy. There's no secret sauce to trading. It's just the market is always going to be right, and it's our job as traders to react as quickly as possible, to be taking profits from the market and not giving any of those back. So with all that said, again, I hope you guys enjoyed the video. If you're new here, make sure that you smash that like and subscribe button so that you don't miss out on any of the tutorials or videos that I do on the channel. Happy trading.